Hey guys, today is March the 17th of 2021, and I wanted to go over a technique that I'm calling it Gann Waves. But he doesn't call it by Gann Waves, but it looks to me like Gann Waves. And one of the greats, Mr. Ralph Nelson Elliott, the one that discovered the waves, uh, 5-wave pattern, ABC correction to the right. He has a big movement. A lot of technicians use his technical analysis, his theory, and you can see that by typing it on YouTube. And there's a lot of technicians that apply this theory in the markets. But I haven't seen anyone talk about if Gann ever had some kind of wave count or anything like that. But I've been researching this stuff, and I'm coming across some things that, leads me to believe that he did have something similar to Elliott Waves, but it's different. So I'm going to go ahead in this video and show you what I've discovered, and I want you to go on this journey with me and then apply it on the instrument that you trade, that you use, and see how it works out for you. So without further delay, let's get into it. This is Elliott Waves. Simple. I'm not going to be too long on this. A lot of people know this, so I'm just going to go over it for the ones that don't. So in Elliott wave theory, it is believed that everything is impulse waves. So this is Cameco, CCJ, and we made a low on March. And what you do is, and this is a monthly chart, so what you do is you count the impulse waves. So this was wave 1, and then we kind of like pulled back. This is wave 2. And then in Elliott's theory, wave 3 is the biggest wave. So it goes all the way up, and you can see it is 3. We're here. 3 could go higher. We don't know where 3 is going to end. There's a lot of, techniques in Elliott to figure out where wave 3 should be. But I'm not going to go into that. I'm just going to show you the theory. And somehow, wherever, if it's here, then, in Elliott theory, it should pull back, have a correction into wave 4, and then do an impulse and finish up on a wave 5. I'm not saying that this is the price, but just in theory. And then after it does a wave 5, it corrects into an A, B, and then it goes down C, and then the cycle starts all over again. 1, 2, 3, and it continues on. Now I'm going to show you Gann's wave, and this only works on the monthly chart because this is how he wrote it, using it on the monthly chart. He actually calls it forecasting monthly moves. So this only works on the monthly, the big picture. So this is a good approach if you want to do like a top-down analysis on an instrument. You want to trade. You kind of want to see how it could develop. This is what you do. So this is how he says it. Monthly moves can be determined by the same rules as yearly. I'm not going to go over the yearly stuff. I'm just going to go exactly on the monthly. So this is the monthly waves. He says, add 3 months to an important bottom. What's the important bottom? In my case, Cameco CCJ, March. He says, add 3 months. So we add 3 months. 1, 2, 3. Then he says, add 4 months, making 7. So then you go 1, 2, 3, 4. If you add them all up, 1, 2, 3, 4, 5, 6, 7. You have a total of 7, right? Then he says to get the minor bottoms and reaction points. This is what he calls the minor bottom or reaction point. So when you get an important low, let's go over it again. You go 1, 2, 3. Then you add a 4, he says. Then you go 1, 2, 3, 4. And then he says to get the minor bottoms and reaction points. So this is a minor bottom and reaction point right here. After 4, after 7, if you add them all together, or after 4. Then he says, in a big upswing, a reaction will often last over 2 months. the third month being up. So in a big swing going up, the reaction points will often last over 2 months. Will often not last over 2 months. In this case, we had just 1 month. Then he says, the same rules as the yearly cycle, 2 down and the third one up. In extreme markets, a reaction sometimes only lasts 2 or 3 weeks. So in this case, the reaction lasted pretty much a month. And then the advance is resumed. So you get an important low at 3, at 4, and what he's saying is that sometimes in the reaction point, you could have November and then December, the same thing. And then on the 3rd, which this candle, you can move it to like January, will have that effect and explode up. So November and December could have had 2 months of a reaction point. But he says that after 2 months, on the 3rd month, which November, December, January, typically would have an explosion to the upside and resume the trend. Now, he also said that sometimes in extreme market moves, it doesn't consolidate for 2 months. It does it at least a month or 2 or 3 weeks, and then the advance is resumed. So in this case, this is the reaction point. We only consolidated for a month, and now the trend resumed to the upside. But in other cases, you could have November and add another candle just like this in December, and you got 2 just the same consolidating. But then, in his theory, the 3rd one, which would be in January, will look like this. So you guys understand that? Hopefully I made it clear, because this is very important, the reaction point. So in this case, we have the reaction point, which was 1 month, 2 or 3 weeks, and then it continues going up. So you do is you add 3. You do it again. 1, 2, 3. And then you add 4. So now this is into the future. So we don't know what's happening, but if we're going to forecast the monthly moves, we're going to add 1, 2, 3, 4. And that brings us to June. I don't know if June is going to be low or June is going to be up. But after June is the reaction point. And that's the key. So let's say, but you could do other analysis to determine, if June is a seasonal low, whatever. There's a lot of things you can add up. But the key is that you're assuming that something is going to happen within the next 4 months. And then a reaction, consolidation, and then an impulse or a move to continue the trend higher. So it's almost similar to the Elliott wave. It's just a different count. So 1, 2, 3, then 1, 2, 3, 4. And then in regards to the direction, Elliott wave believes that there's going to be a retrace of wave 4 and then the impulse wave of wave 5, right? And Gann, he just says that there is going to be, you just count to 7, which is right here. And just 7 happens to be that it pulls back. He also says in a bull market, the minor trend may reverse down 3 to 4 months, then turn up and follow the main trend again. So right here, he's kind of confirming the Elliott wave of the retrace. So he says it could come down to 3 to 4 months, and this is 4 months right here. So in theory, it could be possible that it happens here too. And then if this is June, July is going to be the reaction point, or the minor bottom. And like he said, it could last 2 months. So it could be July, August, it's going to consolidate for 2 months, and then September, the 3rd month, get an explosion up. Or it could just, in July, it could just consolidate like here. in a strong bull market. It could just do it for 1 month, like he said, 2 or 3 weeks, and then the next month, December, this is July, this is June, so July will consolidate, and then where am I? June, July consolidate, and then August explode, to the upside. So this is pretty much the wave count according to Gann's, using the monthly forecasting, forecasting the monthly moves, just like this. Hopefully I made it clear. If you have any questions, feel free to put them on the comments. Let me know your thoughts. Hopefully I didn't jack up Elliott's theory. I went over it very simple for all the Elliott technicians. But this is Gann's way of forecasting the monthly moves, and I think this is pretty cool. And if you want to follow the journey with me here and see how this pans out, this is where we are. We are right here in March, and adding some more to this video, a lot of the seasonalities and technicals are saying that, it could be a possible swing top here. So this wouldn't be a technique that I would trade solely, just by itself. I have to add other confirmations. And I've been, saying that, March could be a possible swing high for Cameco and then pull back. So we'll see. And if it's a strong market, it's going to continue pushing even higher and ignore, everything, and then just, be on a really bull tear to the upside. But if things going to pan out, and especially using this monthly Gann monthly forecasting technique, his kind of what I call waves, we'll see how it pans out. But if it's going to pan out, we're going to make a swing top somewhere in March, maybe this week, maybe next week, maybe the last week. And then the next couple of weeks will be a minor trend, the same way as Elliott's, the fourth wave, going to be a minor trend, and then an explosion to the upside, a reaction point, and then an explosion. Hopefully you like this video. Please subscribe, hit the like button. Leave your comments. Let me know what you think, good or bad. And maybe next video in the future, I'll do the weekly, because he has the monthly, he has the weekly, and then we'll tackle down the daily forecasting technique he spoke about in his courses. I'll see you again.